And welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're jumping down into the world of BTC, taking a look at what has been going on most recently with the price action and what I think might happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will not miss another video update. And if you haven't yet joined us in the Discord server, then why not check it out? Linked in the description down below. It's the first place we go to notify you of the ins and the outs of everything that's happening in the crypto space. So stay up to date by joining Discord. It's completely free. I don't think you'll be disappointed by what you find down there. If you're looking for more from the crypto space, you can check out the Patreon services in the description down below as well. Okay, guys, let's get on into this. Bitcoin paired up with USDT on the hourly chart. Binance is our data source. And just want to kind of stop here for one moment just to say that, yes, this is Elliott wave theory. It is a reasonably complex theory in terms of being able to track the psychology of people buying and selling cryptocurrency assets. It is a little bit to get your head around. If you're looking for more information, join us as the Discord server. We've got a 181-page PDF that's completely free. You can check that out. It explains all the rules and why we look at the things in a very specific way. If reading a PDF isn't up for you, I've also created a video course. I think it's about 22 parts. Again, linked in the description below. You'll find it in the Discord. So do check that out if any of this seems a little bit too alien to you. But let's make a start, right? So as I got going on here, we had this three-wave structured move to the downside, and we kind of got ourselves into a sideways trade all around our demand zone area, okay? So if we just kind of reflect on what this demand zone was showing us previously, this was basically a quick area that was either going to be rejecting. So this was supply over here. We broke through it, okay, and we turned it into demand. As soon as the price came here, there was lots of buying pressure. It took it out of here, okay? Usually up to our supply zone at the top end here, okay? You can see that when we visit, we didn't barely spend any time in this particular range, and then we move on up, okay? So what we've got going on is this continuation pattern, this sideways trading inside the demand zone. This is, in my opinion, a bad sign for BTC, okay? And the reason I think this is that normally if there's a lot of demand in here, the price should not linger. It should not stay inside the zone unless, of course, we're chewing up all of the buy orders and actually we're likely to come to the downside and come out of this demand area, turning this into an area of supply, not demand, okay? So our previous supply range was up here. And up here, as you can kind of see these two yellow boxes, and you can see down here that this has potentially now turned into a supply zone. For example, here, this previous area of supply, we pushed on through it. We tested it here a little bit, and we confirmed it was a demand area. When we came back down, we lingered too long inside our supply area or demand area, and then we got rejected, basically confirming that this is supply. When we come down here and we're lingering too long in the demand zone, chances are we're going to come down and we're going to exit out of here, okay? So this is a smart money concepts terminology, not Elliott wave, but when we combine smart money concepts with Elliott wave theory, we end up with a pretty good understanding of what's going to happen, okay? So let's go ahead and just dive down into these sections, right? So specifically this area here that was previously demand. I drew these on Twitch this morning. We had this upper area and this lower area, okay? So in this sideways trading, we have identified this supply range and we've identified a demand range. Okay, so supply is coming in at 16,778 to 16,861. That's this first area here. This is where we're finding resistance right up here. Okay, we call it supply. So I'm just going to go ahead and actually write the word supply on there just so that we know that that is what this box here is representing. Now at the lower side down here, this is where we have the demand. Okay, so I'm just going to drop that in there as well. And this is an area, like I said, we don't spend much time in it, right? We come down, you can see these wicks, we kind of come in here, lots of buy pressure takes it out. Okay, we came down very briefly just here, and then we took it all the way back up, and we can see that we got huge supply coming in, dragging the price back down as we come up here. Now, from an Elliott wave theory, we can see A, B, and C. We're looking to come down deeper inside our demand zone, and what we're hoping to do here is actually just break this area, just a fraction, so that we can then kind of chew through a lot of those long positions that we're chewing, or basically being added into the mix, okay? So when we start seeing a lot of people going long down here, okay, they're thinking the price is going to be going up. what that tends to do is create pockets of liquidity down here. Okay, this is where they basically have to buy their Bitcoin back or sell their Bitcoin at a loss, right, etc. So this is what they call liquidity, and unfortunately, liquidity is what a lot of institutional players and market makers love to try to go after. Okay, so they're looking to buy up or sell up at key points of liquidity. Okay, so as the price goes up, you'll find that a lot of institutional players and market makers will be selling into the pump, and likewise, they'll be buying into the dump, if you will. Okay, so what we're going to do is I'm going to throw on the HTF liquidity finder. Okay, and what this is going to do is it's going to show us where a lot of that liquidity is essentially building up. So basically the way that this usually works in the crypto space anyway, is that you end up with people putting in their long positions or their short positions using these low points and these high points, these swing highs and swing lows as their stop losses. So it's no surprise that down here you find that there's pockets of liquidity. You'll also find it in little pockets like here as well. Okay, so we're not too concerned about the shorter time views. The thicker these bars, by the way, guys, it's just age. It's not anything to do with time or size of positions. What this is actually indicating to us is how long or the time frame in which this liquidity is associated with. Okay, so bigger time frame liquidity pools are generally going to be all the way down on this wick here. For example, you can kind of see that right in there. This one is on using this wick, for example. This one over here is using this wick. So by looking at the different kind of time frames, you can kind of see the different ideas of where this liquidity is going to be. Okay, so knowing that we're likely to pull back down, reach this demand area, chances are people are going to be liquidated. Okay, so it's always good to know where the liquidity is so you can be better placed. Now, I think the entire structure of this move down, we are looking for a move up, guys, but I don't think we can move up until that liquidity is taken care of. So I think that we're going to come out of here just briefly, just break on down out of here before we move on up. I think this is a WXYXZ scenario, so WXYXZ, something like that, not to be confused with 5-wave impulsive structures. It's not 5 waves, it's not impulsive. This is actually more of anything zigzag patterns and then continuation patterns. Now, essentially, I've mentioned the continuation pattern terminology a couple of times. A continuation pattern is essentially a sideways trade or a ranging market like we see down here. Okay, and then what we end up with is this sideways trade going like this. And one of the things about continuation patterns that not a lot of people seem to quite get their heads around is that it's a continuation of what led into it. So if we come down, we go sideways, we have to go down to come out of this continuation pattern. A lot of people might be thinking bear flags or lots of different terminologies, lots of names and things that get thrown around. But essentially here, continuation sideways, liquidity is down lower, and we have this kind of move here. Now, if I bring up the stochastic RSIs, what can we see? If I come up in here, you can see that the hourly is coming down quite a bit here. So again, we're reaching into that low demand zone area. Chances are that that is going to kind of stick a little bit. Off the 4-hour chart, we are up high. So we're looking to see that progression to the downside. Now, it is going to be a short-term movement. This is not something that I'm thinking is going to kind of linger around too much. If we come to the 8-hour, you can see that we're oversold and we've got loads of progression to the upside. The same to be said for the 12-hour, the 16-hour, the 20-hour, and the daily chart. Okay, the daily can still be down here for a few more days. So it's only really the hourly and the 4-hourly chart that I'm thinking we have this kind of small move to the downside. Okay, so from momentum indicators are telling us that we probably are going to have to kind of move down a fraction. Not a guarantee, of course, but it is an idea that we have this A, continuation pattern, B, the liquidity is down nice and low. We also see, if I come over to the longs and shorts, the majority of people are going long. Okay, that means that there's a lot more liquidity onto the downside. So we want to be aware that, you know, if people are going long, chances are price goes down. At least the majority of people are going long or thinking that they're going to bet the price is going up. Then you can bet that basically the price is probably going to go down and liquidate all those people. So essentially what we look for here is to understand that the liquidity is down nice and low. We're overbought on the 4-hour chart. We're bouncing around a fair bit on the hourly chart. So I wouldn't be too surprised if this actually takes a little bit longer. We come down here, we come back up to the supply range, and then we break on down. There's no guarantee that we do this straight away today. Timing this is going to be quite difficult, but I do think we're going to probably come down to oversold on the hourly, then revisit the higher range, come back to the supply area, and then collapse down into those movements. So there could be some short-term long positions in here, basically trading between the 16,500 up towards the 16,800, just in the range in market. I don't basically trade ranging markets. I don't think it's a good idea personally. So I expect us to kind of just bounce around a little bit longer here before we collapse on down. Once we're done with this though, and we actually move down, I do expect a bigger bounce to the upside. So I'd expect on a larger time frame something that would look like this. And we actually probably have to revisit this range right in here at the $17,200 to $17,500 range. I don't expect that to stick too long before coming back down. Essentially, our macro views are still that we are heading down towards our $13,000 to $14,000 levels. I don't think there's any reason to think that we're deviated away from that. Again, we're doing the usual higher highs, higher lows, and those tend to break to the downside. Again, timing it could be quite difficult, but essentially we are where we are. I expect this to come down pretty rapidly at some point into this area, but until more liquidity builds up, I don't think we're necessarily going to see big moves in the space. One of the things I think it's worth noting is that liquidations are incredibly low. I think when we did the stream this morning, we were talking 15 million. For the most part, if you're 100 million, you're pretty low on the liquidation side. So yeah, I'd expect this thing to kind of 10x in terms of the amount of liquidation. So this, at the moment, this continuation, this ranging market that we're seeing, I think this is basically just allowing more retail investors to try to pile in, find whatever kind of bullish or bearish narratives that they're kind of sticking to, and then load up the pockets of liquidity. Once those liquidity pockets are filled up, I think the price is going to gravitate towards whatever one is going to be the largest, which I think is going to be to the downside, as a lot of people now once again believe that the bottom is in. So when it comes to the price movement, I'm still expecting 13k range. Nothing has changed. Yes, that's a new lower low. Other than that, everything else on this structure looks like we're in a pretty reasonable spot. Once we complete 13,000, we can bounce up in a more significant way. I just don't think it's going to happen just yet. Again, we are falling into the usual trap of higher highs, higher lows, all the usual stuff that people love to draw their trend lines on. None of that really seems to stick. And of course, if I jump up into our daily time frame, let me actually just go flick this on auto for a second. Here you can kind of see the higher highs, the higher lows, the higher highs, the higher lows, all breaking down where we continue to tumble. What we really want to be finding are the lower lows and the lower highs that break upwards. At the moment, we're not seeing these structures, right, where we're going into these lower lows and these higher lows where we can break to the upside. Instead, at the moment, we've got all these little mini ones where it's higher highs and higher lows where we break down. I mean, on a macro, we can argue that we're doing that in sense of, lower highs and lower lows. But again, on a macro isn't really what a lot of people are looking at. They're looking at like the daily or the 8-hour, the 12-hour charts and saying, look, we're going to the moon. And essentially that doesn't seem to make a lot of logical sense. So just kind of be really cautious, guys. Essentially, our structures are here. Everything seems to be following along quite nicely. The sentiment is that the price has to move down lower. At the moment, big players are not buying. So if we have a look at the whales, we can see that the whales are coming out of their positions. Sharks, I think, have made a bit of an error here. We'll see how that kind of plays out. Other than that, guys, all you're really seeing is retail investors coming in, and whereas big money just simply is avoiding it. If we take a look at how the whales have performed in 2022, you can see all they've been doing is coming out of their positions. Now, that doesn't make a lot of logical sense if the bottom is in. So just kind of bear in mind that the whales will be looking to buy cheap Bitcoin from the retail investors. At the moment, the retail investors are heavily kind of accumulating or hodling. At some point, I do think they're going to succumb to some selling pressure, just like they did in 2018, which we can take a look here. Basically, they believe that the bottom was in continuously until eventually they sell down here. And during this flat period, this is where you find that the whales were buying. So that's kind of what we're waiting for. Other than that, it's pretty much business as usual here. Sideways trading activity on the charts. Slightly deeper to go before we bounce up in a more significant way. And yeah, I think that kind of covers everything off quite nicely. If any of that doesn't sound like it makes a lot of sense, do join us down in Discord. Check out the Elliott Wave Theory course at 𝗕𝗘𝗪𝗀𝗀𝗪𝗀𝗪𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 works incredibly well. It basically tracks people's behavior and why they're buying and why they're selling and all that kind of stuff. If there is a PDF in the Discord server, so do make sure you join if you haven't done so already. Guys, until the next one, have a fantastic day.